Hello everyone, how's it going? In this video, we will cover the stock COSMOS Health, trading under the ticker symbol COSM. The market has been volatile recently with many equities up and down. Many people are interested in COSMOS Health because of the short squeeze potential, and in this video, we will take a look at the stock from a technical and fundamental perspectives and determine what could be a recommended course of action to carry out COSMOS Health. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description below, as every help is greatly appreciated. Over the past few days, the price action of COSMOS Health has been going through a lot of ups and downs, with some clear attempts to go higher. So far, none of those attempts have succeeded. The current price action suggests that the bulls are trying to regroup if they have decided that they would choose to go higher up. COSMOS shares are currently trading between $3.50 and $4 for the most part, as the pullback continues to have some weight on the stock. For the moment, we cannot confirm whether COSMOS shares will dip lower just yet, other than the momentary pullback. What I believe will happen is that the overall direction will continue to be up in the upcoming future. In the meantime, I would recommend to look for a better entry point opportunity and to resume the purchase once the upward tendency is confirmed for at least 3 trading days. What is your take on the company's short-term perspectives? Do you intend to increase or to decrease the position over the next few days? Please let me know down in the comments. COSMOS Health is an international healthcare group based in Chicago selling nutraceuticals. They also commercialize generic medications. They have a commercial presence throughout Europe, Middle East, Asia, and of course North America. The company has an emphasis on nutraceutical research, development, and commercialization because of the low-risk profiles and regulatory clarity in this area. I should also mention that the management believes that the stock now has solvency issues, putting its going concern into jeopardy. The management mentioned that due to the recurring losses, there will be eventually a going concern issue to be put on the table. They believe that there can be a few solutions that must be considered for the company's survival, including debt issuance, diluting the shareholders, or reconstructing the debts. In other words, reducing the money going out and increase the money coming in. The company probably chose the road of selling the equity, taking the advantage of the renewed interest recently from retail shareholders due to the expected short squeeze and the price increase that soon followed. The long-term price action has been plagued by poor results, as well as the short orders piling up against it, causing the stock price to plummet for a period of time. For the period between August and November of 2022, the stock price declined by more than 83% before recovering back a bit. Over the past few years, it mostly traded between the high 10s and lower 3 digits. Obviously, if we only look at the whole situation from a technical perspective, it looks like a historical opportunity to buy in now and to wait for a recovery. I don't believe that we are in this context anymore, as the market and the company are now evolving in a different environment. With that being said, we should be able to see some significant recoveries nonetheless due to the short squeeze, as if it were to occur. Although the relevance of the financials are limited at the current point, they can tell us how the company is doing, especially regarding the going concern and the long-term perspectives. Regarding the profitability, things are on the stagnating side, as both the revenue and gross margins are having a very hard time growing, with the operating expenses still hovering between $2 to $3 million. This means that if COSMOS Health is popular with shareholders, people are looking at the potential of making money beyond its fundamental results, if we assume that things would remain constant. Now, if we have to find good news in its financial statements, it would probably be the liabilities being under control. It's been controlling between 40 to 45 millions away from the peak of 51 millions back in Q4 of 2021. This means that the company is trying its best to keep things under control. Another thing that we can see is that the company's assets are almost entirely financed by debts, with a relatively small portion of the operations financed by equity. This means that Cosmos can have a significant amount of obligatory cash outflows, and if they don't comply with those, they can go insolvent, with the assets liquidated to reimburse the creditors, and then the leftovers, whatever that may be, could be zero, goes to the equity shareholders. The cash situation for Cosmos is also negative, with most of the cash inflows from financing. This is from, of course, the issuance of debt and sometimes sale of equity. It also confirms the remarks earlier regarding debt versus equity financing, as well as the obligatory cash outflows. The situation of Cosmos overall is not looking very good, which could be the reason why it has a large position shorting against it. This can reinforce my feeling that Cosmos is a good stock for trading, but not necessarily for investing. The low cash levels suggest that a company can have a lot of problems going forward without stock dilutions or debt issuance. Now, let's also take a look at the shareholder composition of the company. According to Fintel, currently we're all retail traders holding the stock. If this were true, then we would be looking at the stock that is obviously good for volatilities and short-term swing trades, but the uncertain future of the stock itself and the company itself would mean that the short-term outlook could be very volatile and not always upward. One key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional shareholders tend to take a long-term view with a focus on the company's fundamentals and growth perspectives. They're also less likely to engage in short-term behavior and less affected by the market volatility as well. Another behavioral difference is that they are more active in corporate governance. They tend to vote more on important decisions and during the shareholders' meeting, whereas many retail traders and investors would tend not to bother because the number of shares they have is way too little to affect anything if they understand the issues at stake at all. In fact, Cosmos Health has a massive appeal, mostly because people believe that there can be a short squeeze. Short squeezes are what shareholders hope to achieve by piling up in a stock that is massively shorted, to force the short sellers to redeem their positions, therefore buying the stock back. They are very often compelled to do so because as long as those positions remain open, they have to pay financing fees, eroding away their profits, and also have to assume the risk of infinite losses. In the case of Cosmos, there's a large position of shares been shorted against it, taking more than 1.3 days to cover. This means that if the shares were to skyrocket, whether because the fundamentals have improved, or if the circumstances surrounding it have changed, or that the demand for the stock increased with no fundamental reason, this can force the short sellers to redeem their positions. I believe that Cosmos has a significant possibility to squeeze, at least for the moment. It is very important to remember that short interest doesn't guarantee the result, but nevertheless, it can be a very important metric to monitor. It's also worth considering that short sellers have valid reasons for their bearish sentiment for most of them, and that a short squeeze may not happen regardless of how many stars are being aligned. Based on the analysis, I would recommend to wait for a better entry point. I believe that Cosmos Health deserves to be in your portfolio if the risk tolerance is high enough, and if the holdings are sufficiently diversified. I would recommend an exposure of 1% of your portfolio in this stock.